Holy smokes, everyone. What a wild 24 hours it has been. We have just lived through the single most craziest day in cryptocurrency history, where Bitcoin dropped all the way from 40,000 to 30,000, a 30% drop in one day. But then Bitcoin quickly rebounded back up to $40,000. But this may leave you thinking, okay, that was just a blip on the radar. That was just market manipulation. We're back in the bull market. We're back on the road to 100K, $1 million Bitcoin. But in this video, I'm going to warn you and tell you why that may not be the case, and I'll also tell you why the sell-off may not be over. I think we also need a hot debrief. We need to huddle in and just talk about our game plan for the future and talk about how we just completely got smashed and what we should be doing and what we should be looking out for going forward. I've got huge amounts of data and information for you, so let's get right into it. Looky here, everyone. Over $8 billion was liquidated in Bitcoin in just one day. That is absolutely crazy. And this is why I always tell you how margin is so dangerous in the markets, because what you have to know about with margin is once there's huge amounts of margin in the market, these big whales and these market movers look at when there's huge amounts of long positions and when there's huge amounts of leverage, and they say, ooh, this is a good time to manipulate the markets, because once they dump, that means all these other long positions and margin positions get liquidated instantly, and it makes the declines, the price declines, even quicker and even steeper. But listen to this. Roughly 90% of all trades in the past 24 hours came from long positions. Interestingly, the largest single liquidation order happened on Huobi, and it involved the primary cryptocurrency. And guess what? The trader, just one trader alone, he got absolutely wrecked. He lost nearly $70 million. Ouch, that's really a bad day at the office right there. I guess he must have called his wife and said, honey, we ain't eating tonight. And people, when I called that the bull run is most likely over yesterday, it's not just me saying this. Many other cryptocurrency experts are saying that the current bull market run is over as well, or it's highly likely that it is over. There's always a possibility it could keep going on, but all the data and information is saying otherwise. So a part of the big sell-off is because of this. Part of the reason for Bitcoin's weakness seems to be at least a temporary reversal in the theory of broad acceptance for cryptocurrencies, and institutional support retreats. This is what I've been warning about, that with this renewable energy agenda and with all these big corporations getting around this huge climate change risk and this big push to get rid of coal, I said this is going to be very bad for Bitcoin, because all these other institutions are going to come under pressure to stop using Bitcoin, because they'll say, look, Bitcoin's too dirty, it uses too much coal. And even Kevin O'Leary, he says, one of the main reasons he didn't want to come out straight away, and who knows if this is true or not, but he said is because all his friends, all the other big business people said, do you know what Bitcoin uses? Do you know how much coal Bitcoin uses? And he came under a lot of peer pressure to sell his Bitcoin and not to invest in it at all. And so other institutions are coming under this pressure as well. So obviously we know as well that there was a lot of China FUD. China's banning institutions for using it as a form of payment. But we've all heard that before. Obviously it was Elon Musk tweets when he announced that Tesla would no longer be accepting Bitcoin as a form of payment. But then he completely slapped us all in the face again. So one of the things that triggered this sell-off, out of the many things it did, was Elon Musk tweets saying he's no longer going to accept it as payment, and these other people tweeting him saying that people are gonna, be really angry when they realize that Bitcoin sold all their Bitcoin in the first quarter, and Elon Musk tweeted back saying indeed. And then now during the sell-off, he tweets diamond hands, people, he's playing with you here. He's just a billionaire that's a bit bored, that's having fun manipulating the markets and watching all the peasants scream and squirrel to try to get some gains. And I think his tweets are slowly going to start losing power because people aren't really listening to him anymore. And I don't think it's going to start moving the markets nearly as much as it used to. But people, this is huge. Listen to this. And this is something you probably haven't heard about. Additionally, a new report from Morgan said that based on future contracts, institutional investors appear to be moving away from Bitcoin and back to gold. Peter Schiff must be laughing and grinning right now. Bitcoin is often touted as a potential replacement for the traditional metal as a store of value. But people, something we have to think of very carefully right now is, first, the narrative for Bitcoin was a mean of exchange and saying it was going to replace fiat currency. Well, that obviously didn't work because it was too slow and too expensive. Then the new narrative for Bitcoin was it was a store of value. But if it plummets 55% in a month, it's not a very good store of value yet. Now, I do believe in Bitcoin in the long term. I do like Bitcoin. I'm not trying to bash on Bitcoin here, but just being a realist, those two narratives still aren't working. It may work in the future when there's more layers on Bitcoin where they can do transactions like the Lightning Network and other layers to make it faster and cheaper. And as the market cap does get bigger in the future bull runs and the price gets bigger, it will get more stable, just like gold. But for right now, those two narratives aren't working out. But for all my friends in the cryptocurrency markets that are new, because I know there's a lot of newbie investors in crypto and a lot of newbie investors in the stock market, and they don't really understand fully how the economy works and the macro picture, macroeconomics, and what's happening in the investment environment overall, is we're in a risk-off environment right now. During the pandemic, when there was so much money printing and interest rates were so low and there was so much money being pumped in the system, it was just, pretty much a free-for-all. There was money being thrown at everyone, right, left, front, and center. So it was a risk-on environment because money printer was going burr. They were devaluing the currency like crazy. You could get money very cheap. So people just using this to speculate on these high growth tech stocks and these cryptocurrencies, collectibles, even like Pokemon cards, etc. But now that there's talks from the Federal Reserve to start taper and start lifting interest rates, and now that it looks like we've hit the peak, we're going into a risk-off environment and the markets are selling off and they're waiting to see what's going to happen. And it just says that here. The weakness is not isolated in crypto, like I just said, suggesting that the moves could be part of a larger rotation by investors away from more speculative trades. Tech and growth stocks, many of which outperform broader markets dramatically during the pandemic, have also struggled in recent weeks. And I was warning you, that all these high growth tech stocks, they're too overvalued. They have to come back down to reality, and that's what we're seeing. The ARK Innovation ETF, Cathie Wood was all the rage, a few months ago. A fund of high growth tech stocks led by star fund manager Cathie Wood is now down 30% from its February highs, and the Nasdaq is down 6.9%. And also something I thought that would happen, and I warned could be a risk for the markets as well. There's been so much crazy gains in the cryptocurrency markets, in the stock market. I said there is probably going to be a lot of selling because people have made so much profits in April and May when it comes for tax time, and that confirms it here. It says the declines also coincide with a delayed deadline for tax payments, which have caused selling pressures as investors look for cash to pay off capital gains tax liabilities. And also people are going to be trying to take advantage of the lower capital gains tax now because Joe Biden has announced he wants to increase capital gains from 20% to 39%, which would absolutely completely smash cryptocurrency traders. And people, this is one of the biggest threats. Listen to this. We believe government crackdown on cryptocurrencies can trigger another crypto winter and reduce trading activity. Harsher crackdowns on crypto is possible in many developing countries which may view crypto as a threat to their fiat currencies and monetary system. People, this is huge and I don't think you really understand it. Bitcoin and crypto was growing so rapidly, this absolutely terrifies the central banks and it absolutely terrifies Wall Street because crypto was sucking a lot of money out of Wall Street and a lot of money out of fiat and a lot of money out of the bond markets, and old money, they're not going to go down without a fight. And the government, they don't like that one bit because that puts their failed and corrupt system at risk. So of course, they're going to come and try to kill it. They're going to try to regulate it and they're going to try to crack down on it. I don't think they'll completely kill it, but just even the suggestion of regulation or banning will be enough to put the price down, and then they'll say, haha, look, we told you so. We told you, that, Bitcoin, it was worth nothing and crypto was worth nothing. And this is going to take a lot of people out of the cryptocurrency market. And obviously with China, they've just developed their own central bank digital currency. So obviously they're going to try to ban crypto because they want everyone using their cryptocurrency, their digital yuan. So this is pretty obvious here. If the Federal Reserve does create their own digital dollar, this may put more regulation on Bitcoin so it doesn't compete with the new Federal Reserve digital dollar that they will be creating very soon, maybe within a year to 2 years. The Federal Reserve is working on it. They're saying it's not a priority, but people, it definitely is because the current fiat system is dying. And something that made it very obvious to me that we were close to the top was this Dogecoin saga. When I saw Dogecoin being pumped up and this guy, how he turned, 180K to 2.8 mil, and now he's probably lost most of it. The Dogecoin millionaire is a really nice guy. But unfortunately, there's a lot of people like him that would have put their life savings into Dogecoin, trying to become a millionaire overnight, like in the Great Depression and the dot-com boom. And all my friends that weren't into investing, weren't into cryptocurrencies, weren't into stocks, they were all getting into these crazy hype investments as well. And this is exactly what happens in all markets at the top. You get the mum and dads that never invested before, that put all their money in, and they get wrecked. And more issues for cryptocurrency, and this has always been an issue, is Tether and the amount of backing that Tether has. And it says here that Tether is backed by 49% of commercial paper. And what that pretty much just means is that all it is backed by is Tether being able to issue corporate bonds. And corporate bonds, especially for a cryptocurrency company, they can be very hard to sell and they're not very liquid, especially if they're junk bonds. I don't know the rating for Tether, but if there is a big sell-off and people try to take out their money from Tether and they can't sell those corporate or commercial paper bonds quick enough, well then people are going to lose out on their money. And this is another big issue, and something that really annoys me and really worries me is even if you wanted to buy the dip when it hit 29K, $30,000, you couldn't, because a lot of the major exchanges completely shut down and they had technical issues. Just like what always happens, even with all these free trading apps, they say, oh, look, we're free. But you know what they're doing? Every time there's a huge amount of volatility in the markets, these institutions, these trading apps, they shut down. They do all the insider trading. They send all your trading flow and your trading data to the big institutions. They sell it off. They're the ones that get Bitcoin at the lowest price, and they're the also ones that resell it back to you at a higher price. And it's funny how people say that, that Bitcoin is decentralized and it's not manipulated like the stock market. Well, the stock market is obviously manipulated, but people, the cryptocurrency market is much more and easily manipulated than the stock market. Alrighty, let's hit the charts. So we can see here there was a huge sell-off. There was a lot of money being liquidated, so this caused a very sharp sell-off. Now Bitcoin rebounded back to 40K and it's kind of just bouncing around here. Now, in order for Bitcoin to continue the bull market, it needs to blast through this 40K barrier and sustain it. But something you have to look for, which will confirm that the bear market is here, is if we start setting lower highs, like here where it started to set lower highs and lower lows, then that is a bearish trend and an indicator that we are entering in a bear market. And the key support level is here, 30K. If we break 30K again, the next stop would be 20K. And now that may be a buying opportunity for you to really buy a nice decent dip, but it's not impossible that Bitcoin falls all the way back down to 10K during the bear market. And again, this could just be institutions manipulating the market to make it seem like, oh, Bitcoin's going back up. This is something that's called a bull trap, and it is a trap. They buy the dip, they make it seem like, it's coming back, it's going back to 100K, and all the retail investors jump back in at 40K, and then they start selling off. And it'll be very interesting to see if this happens in the stock market, because look at this. Look at the amount of margin debt in the S&P 500. It's at all-time highs, around $820 billion. So with the cryptocurrency market, how all these margin positions and long positions got liquidated, if we saw a complete sell-off in the S&P 500 and the NASDAQ by around 15 to 20%, we could see positions like what happened in March 2020. The reasons why we saw 7, 10, 13% declines in one day is because all these people were getting margin calls. And that's what's really dangerous. And that's what could lead to a flash crash in the stock market as well. I'm not saying that's what's going to happen, but that's just something you have to be aware of. So again, everyone, just to reiterate what's going on with the bigger picture right now, we're going into a risk-off environment and people are flocking to safe assets like gold, like US treasuries and cash. There's a lot of uncertainty in the market. There's not much events that's going to be happening in the future to lift the markets. There's no more stimulus. Unemployment benefits are going to be cut. The Federal Reserve is most likely going to taper. There's a risk that inflation could get out of control and the Federal Reserve to lift interest rates. If that happens, the US dollar would strengthen. And when the US dollar strengthens, stocks fall, crypto falls, and if the dollar gets really strong, not saying it's going to happen, but even gold could fall as well. But it all depends on what happens to inflation. So everyone, I hope this video was informative for you, and for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date what's happening in the cryptocurrency markets, the stock market, and global finance news. And if you're bored, I'll put up some of my other videos here. I'll see you there.